Hi everyone. In this video we are going to go through the process of reading an options pricing table and help you understand what's involved, what you need to look at and what you don't need to look at. Here's the deal with broker platforms. Broker platforms conveniently display all the option pricing data that there is. The contracts, the strikes, the months, everything is presented in an easy to follow options pricing table for traders like us. Now, though it's confusing at first, it's incredibly easy to follow once you get the hang of it. And like anything in life, as long as you know what to look for, then you know exactly what to focus on. So let's do this. Let's jump into the platform. I'll be using Define Edge Securities Opstra platform, but it's similar for other platforms as well. This is the platform of Define Edge Securities, what they call Opstra. We click on Builder, and this is the Builder tool that comes up. You can always select the script that you're interested in. Currently, it's by default on Nifty, and what we have, the rest of it, are the details of the contracts that you would be looking at. But for this video, we're going to focus on the options chain. Now, when I click on the options chain for the Nifty shows up. Right on the top of this chain are these dates that you see. And these are basically the expiry for the Nifty options. It's selected in the next monthly option or monthly expiry. But as you can see, the Nifty has weekly expiries as well. So the 5th, the 12th, and the 19th. But by default, the immediate monthly expiry is selected. Now, depending on what I want to trade and how long in the future I want to trade, I can select one of these dates. For now, we're going to stick with the immediate expiry. I can also select here the near strikes or the all strikes options. Now, for some options, some strategies, we want to look at very deep in the money strikes. In that case, I need to select all strikes. But for now, we're going to keep the near strike because for the Nifty, most if not all option strikes are liquid. So as I scroll down, I see the call options listed on the left and the put options listed on the right. As I go down, the strike price increases. So starting at 18,500 and going up all the way up to 20,450. The current market price or the at the money strike price, which I'll explain in the next video, is selected in this green band. So right now the Nifty is trading at about 19,600. So accordingly, the 19,600 is the at the money strike. Now, as I go down here, these are the prices that I see for the calls. And in the orange right here are the prices for the put options. And when I hover, for example, if I'm interested in buying an at the money call, I will go ahead and put my mouse over here, and then these two buttons show up, allowing me to buy or sell. So if I want to buy the 19,600 call for the 28th of September expiry, all I do is I go here, hover over here, and it will give me the option to buy that stock. So if I just click on the buy button right here, it brings up this dialog box, which allows me to either put an entry price for the contract that I'm looking at buying, or I can just keep it as it is, and that adds this position to my builder. As you can see, this is the options chain, and with this, it is very easy to understand what you want to buy and how you want to buy it. So depending on what your strategy is, you will go ahead and select the strike price, which is right down the middle. You have the calls on the left and put options on the right, and by just hovering the mouse over the price, the sell and the buy buttons come up, and I can go ahead and select the contract that I'm interested in buying. Now you will also see the deltas, the IVs, and the in the money probabilities. We'll cover this in subsequent videos. And as I mentioned, you have the near strikes and all strikes over here. So by selecting all strikes, all the strike prices show up. With the near strike selected, only the immediate strikes along or surrounding the at the money strike will be displayed. That's it for this episode. If you have any comments or feedback, please post them in the comment section right below this video.